European banks are still very cheap. Actually, the average valuation 0.9 times tangible book, 8 times earnings for an RE of 10. Cheap, but we're not saying they should be trading at US multiples. US banks, some of them trade at 2 times tangible book and 12 times earnings, so around a 30% premium if you look on average. We think that will continue, and the reason why is we're still overbanked in Europe. We're still having 4,700 banks in Europe. That's more than in China. We have more banks per inhabitants than in China. And we still don't see a big consolidation drive. And we really need to see some cost adjustments really over the long term. So structurally, European banks are not as in good shape as the Americans, and they generate lower ROEs. And then second thing is we don't have a securitization market. In the US, we have a very buoyant mortgage securitization, high yield market. The high yield market in Europe is 1/10 of the US. And I think regulators have missed the opportunity to really create velocity in the balance sheet of European banks, which allows them to trade and sell assets and create new loans, and that didn't happen. So overall, we have some structural issues, and that means European banks will be at a discount to US, but it doesn't mean European banks are not good investments. They are.
Yeah, it was interesting. I was talking to the European Commissioner for Financial Stability, Marie McGuinness, quite recently about progress on CMU, because you talked about the opportunities of US capital raising compared with Europe as well. And she was quite excited that we are making progress. But I mean, it just seems so slow, Kian, as well. We just seem light years behind the US still. I think that's what you're saying as well.
Yes, I'm afraid when it comes to helping the banks on the regulatory front in respect to velocity of assets, some banks in the US, they securitize 80% of their mortgages. And when they do so, they can give new mortgages. And it's a very buoyant market, or the high yield market. When the SMEs in Europe have defaults, you cannot sell any of your loans. There is no liquid market in Europe. And we need that. And I think since the global financial crisis, nothing has really changed. There has been some drive to change that, but ultimately the rules are still very sticky, very difficult to really see a change in the securitization market. And that's a big negative.